Good evening, and thank you for joining us on the program. I'm Temple Ashaju. This week saw the release of some numbers for the investing public and, of course, the financial markets at large, some of which includes the inflation figure, which was really positive and much healthier for Nigeria. And, of course, the month of March, Nigeria's balance of payments, which was released by the Central Bank of Nigeria. These are investing or investments aiding data that a lot of investors, foreign or domestic, really always want to get hold of. But the week was really bearish for stocks. And of course, average yields in the fixed income markets dipped by some 31 basis points week on week to 13.78%. All of this will form a greater part of our program this evening. But let's move on to some news right now that as an investor, as an operator, or even regulator in this market, you really need to get hold of. The new set of market indices focused on growth and value investment strategies was floated this week by the Nigerian Stock Exchange in partnership with Securities Market Group, Meristem Securities. The Growth and Value Index, which became effective real-time on the exchange from March the 12th, aims to provide a benchmark for product strategists and asset managers. The Nigerian Stock Exchange says the indices are calculated and maintained by the NSE and have been aligned with the Index Committee's governance standards of the Stock Exchange. In January this year, the Stock Exchange, in partnership with an investment bank group, AfriInvest Securities, inaugurated 2 new indices targeted at the banking sector and high dividend yield stocks. The Stock Exchange now has 4 new indices expected to boost traded funds and derivatives in the local market. And of course, Nigeria Securities and Exchange Commission on Wednesday released the exposure draft of new rules and sundry amendments to the rules and regulations of the Commission. The 58-page document proposes new rules on electronic dividend mandate, transmission of shares, and direct cash settlement process. Major amendments in the document are in respect of related parties' transaction and conflict of interest. The SEC also publishes exposure on the appointment of compliance officer by market institutions, as well as amendments to Schedule 1 on securities offering. On collective investment schemes, the Commission has eased the offering process to make them cost and time efficient, looking to prevent investors' money lying idle for weeks pending the conclusion of an offer and allotment. And Nigeria posted a balance of payment surplus of $2.8 million in the fourth quarter of 2018 after a deficit of $4.54 billion recorded in the previous quarter. A new report released on Tuesday by the Central Bank of Nigeria shows that Nigeria's current account balance improved from a deficit of $1.54 billion in the third quarter of 2018 into a surplus of $1.1 billion in the final quarter of last year. A balance of payments is a summary of Nigeria's monetary transactions made by the government, private organization, and individuals with the rest of the world. In the fourth quarter of 2018, Nigeria reported a net acquisition of financial assets of $2.32 billion, which compared better to a net incurrence of financial liabilities of $4.61 billion in the third quarter. And now some earnings review. We have just 2 of them on our radar. Tier 1 lender, Access Bank, this week released its audited financial year's 2018 results, reporting an earnings per share of 3 naira 31 kobo, an improvement over the 2 naira 11 kobo reported in 2017. The lender also declared a final dividend of 25 kobo per share as gross earnings grew significantly by 15.18% to 528.75 billion naira in 2018. Our net interest income jumped by 6.2% to 173.53 billion naira due to increase in the volume of investment securities. Impairment loss on loan reduced also by some 57.48% to 14.65 billion naira over the 34.46 billion naira performance of 2017. Access Bank's other operating income was up by some 64.36% to 13.18 billion naira in the calendar year under review. And late Friday, UBA PLC also released its audited 2018 results, posting a rise in earnings per share to 2 naira 20 kobo from 2 naira 19 kobo in the preceding year. Now, the lender declared a final dividend of 65 kobo per share, with a gross earning climbing some 7.04% to 494.04 billion naira compared to 461.55 billion naira in the year 2017. Net interest income fell marginally by some 0.96% from 207.63 billion naira in 2017 to 205.632 billion naira in 2018. And that's as a result of rising costs of deposits that pushed up interest expense from 118.02 billion naira to 157.27 billion naira. Now, other operating expenses was up by 3.43% to 114.38 billion naira, as impairment loss reduced drastically by 86.23% to 4.52 billion naira compared to the 32.89 billion naira in 2017. Now, the bottom line for UBA came in at 78.61 billion naira, and that's 1.37% year-on-year growth compared to the 77.5 billion naira in 2017. Now it's time for some market review. We'll begin with the equities markets, which closed negative this period, with the NSE All-Share Index shedding some 2.45% this week. And of course, that's closed at 31,142.72 points. Market capitalization or equity capitalization actually lost some 291.5 billion naira to settle at 11.6 trillion naira for this week. Now, the downturn was driven by bearish sentiments in the banking sector, the consumer goods segment of the market. Industrial giants were also down, including Dangote Cement, and of course, insurance indices, except for the oil and gas segment, which managed to rise some 0.09%. We saw sell pressure across bellwether stocks like Guarantee Trust Bank that lost some 5.09%. Zenith Bank also dipped by 11.82%. International Breweries was down some 10.93%, while Guinness shed some 4.69%, and these are companies from the consumer goods segment of the market. Dangote Cement was down some 2.56%, as Lafarge, which is WAPCO, was down some 0.77%. PZ, under the consumer goods segment of the market, was also down some 5.58%, while Prestige Assurance fell this week by 7.41%. Let's look at the unlisted securities market, which is the NASD-OTC, where the USI this week was also down some 0.32%. That was negative. Market capitalization fell to 527.38 billion naira, as volume of transaction this week was at 109.68 million units. That is valued at a whopping 1.62 billion naira in 52 deals for the entire week. And trading was seen across just 8 of the securities tradable on the platform out of some 39 companies that you can find on the platform. But CSCS, that's the depository of the Nigerian capital markets at large, was the leader in terms of this week by volume and value for this last 5 trading sessions. And let's move on to the fixed income markets, where average yields in the fixed income markets actually dipped some 31 basis points week on week to 13.78%, and that follows moderation at both ends of the curve. The short, the mid, and of course the long end of the curve. The lower yields at the short end was driven by confluence of lower stop rates at this week's Treasury bills auction, where average stop rates came in some 73 basis points lower, and that's some 12.03%, as well as some reductions that we saw in the open market operation. Well, of course, the 180-day, which was 24 basis points, this week settled at some 13.2%. Of course, the reduction in OMO auctions was by the Central Bank of Nigeria, but average yields contracted some 54 basis points week on week, so 13.36% following investors' interest in varying long-dated instruments. Average bond yields, however, dipped by some 8 basis points week on week to 14.20%. But if you look at the numbers on the screen, we've got the 23rd of February 2028 as one of the key securities that a lot of investors had their interest in this week. Was priced at 98 naira 66 kobo, as opposed to some figure that it was traded at the secondary markets before now. But for yesterday, Friday, we had just 15 deals in the markets, and the total value of the transactions yesterday came in lower at some 32.141 billion naira. In terms of the treasury bills transactions for Friday, we saw interest, of course, at the longer end of the curve. A lot of the 2020 dated securities and late 2019 securities where the securities where we had a lot of transactions yesterday. We saw in general some 234 numbers of deals valued at 111.954 billion naira. Now, there are indications that banks and other financial institutions will begin to contribute some 10% of their profit before taxes to national housing scheme accounts, actually. Well, this does not seem to be going down well with capital markets players, one of which is the former chairman of Nestle PLC, Dr. Olusegun Osunkeye, who decries the act and asked the President, Muhammadu Buhari, not to assent to the bill. Let's listen.
Yes, I'm very concerned when we read in the papers that a bill has been passed whereby banks, insurance companies, pension fund administrators will be required to pay 10% of their profit before tax into a national housing fund. I think it is a misdirected effort. It is vexatious as far as I'm concerned. Why should small, medium enterprises and others suffer? Because this tax is 10% of profit before tax. It's not just going to affect banks, insurance companies, and pension funds. It will affect other sectors of the economy. It will increase the cost of doing business. But I am particularly concerned about pension fund administrators being asked to pay tax. Monies that go into pension fund administration are monies meant for pensioners who have worked and contributed their quota to the economy of this country. To now say that those monies will now be taxed simply because they put it into income-yielding businesses, you want to tax it again, I think it is something for concern, and I believe and I expect that it will not see the light of day because it has not been signed into law by the President. And I'm joining my voice to those who have said the President should not assent to that bill and it should not see the light of day. Yes, I agree that housing is very important in that sector, but equally important is also education, tertiary education. Equally important is healthcare delivery. So we have these three very important areas in our economic life for the well-being of the citizenry. So looking at the budget, the national budget, enough funds should be allocated as much as possible for these three sectors, including also the development of infrastructure, because the infrastructural facilities need to be looked into, and massive investments should be allocated also to infrastructural development, because without good infrastructure, the cost of doing business will be high, and the well-being of the citizenry in healthcare, housing, and education will not get there.
It's Dr. Olusegun Osunkeye. Well, after the break, we'll bring you some agenda-setting nuggets from analysts at FSDH Group. Stay with us.